Hello, hello to all the Web3 enthusiasts. This is Mike speaking, and welcome to the new episode of Synopsis. Our today's guest is actually uh, Bob, and a good boy, MacBrennan Peet.
Yeah.
Hello, guys. How are you
Hi.
today?
Good. How are you?
I'm also good. So, yeah, this is gonna be the first time when we have two guests at the same time. If Bob has something to add, so don't be shy and go ahead. And
Awesome.
today we're going to discuss a very hot topic. So, the recent launch of Project Zero, and we have a bunch of questions prepared. And let's get straight to the action, if you don't mind.
Let's get into it.
To warm up, of course, Brandon, since it's your first time at Synopsis, let's start with some intro. Well, we know that previously you managed investment funds and were in health tech. Could you please tell us the story of how and why you joined the Web3 industry?
Yeah. I've sort of been in Web3 or crypto, just crypto, like since the start. Uh I was tracking Bitcoin at like 12 years old and getting like a daily newsletter on, what was happening with Bitcoin. And So I've been passionate about it since the start. My professional background has ranged from basically across like tech, um, finance and crypto. Notably, yeah, started a health tech company, which got acquired by like an international strategic. Managed a fund. Um, Started two proprietary algorithmic trading firms, both that did very well. And Yeah, also previously co-founded um, marginfi, which is like the fastest growing DeFi protocol in the industry anywhere from a TVL perspective in 2023. And now, yeah, founder of Project Zero, which is sort of like this new kind of generalized DeFi prime brokerage, which allows you to essentially use the venues you love using. DeFi is very multifaceted. There's borrow lens, there's perp exchanges, there's swaps. But the problem is the minute you choose one, your capital's sort of like on that venue and you can't use your capital to go to a different venue. And so basically what Project Zero does is it unifies your liquidity so you can trade all these different venues in a single portfolio with single margin, single risk. And You actually get a better experience that way.
Awesome. So, thanks for the double intro of your background, which is really solid, and introducing the Project Zero, actually, the main topic of our today's discussion. And as of we are recording it on Friday, it has just been launched. So, could you please tell us what called for actually creation of Project Zero? So, let's start with this.
Yeah. Something really cool is happening right now, which is that DeFi is maturing. We're seeing really robust smart contracts being built. We're seeing liquidity get it sticky across venues. We're seeing people really double down on venues they like, and these venues have staying power and they serve like very bespoke needs. And finance is this, as an industry is very multifaceted. There's a million things you can do in finance and a million sort of like reasons to hedge or need different products for different things. In DeFi, the big product segments tend to be like lending protocols and like borrowing, tend to be like perp exchanges, tend to be like swapping venues like AMMs. Um, I would consider those like the big three. There's then like stablecoin venues, and there's also like launch pads. This is kind of in a nutshell what is starting to have staying power in DeFi. But the problem is that, yeah, if you're using your favorite borrow lend and it's on, Solana, for example, but then you want to go trade perps and it's on like Hyperliquid, for example, what do you have to do? You have to like withdraw from that borrow lend, bridge your capital over to Hyperliquid, open a long on Hyperliquid, and now you just lost your exposure on a venue that you wanted to probably keep your exposure on. And then this sort of compounds. So like that's a very simple use case, but like let's do something like one step up. Let's say I want to be delta neutral across two venues. So I want to go long Solana perp at like, let's say $200 for, $100 of long exposure on Drift. And I want to do the exact same, but I want to go short on like Jupiter perps, for example. So now you're delta neutral between both, but now let's say the market moves up, right? Well, you're short on Drift or on Jupiter, and Jupiter doesn't know you have that long exposure on Drift. So what happens? You get liquidated on Jupiter, and this sucks. Like this is really basic stuff that you're not getting any sort of like solution for. So what Project Zero does is it integrates both Drift and Jupiter. So if you like using Drift and if you like using Jupiter in this case, you can continue to use them. And then on Project Zero, you can do the same exact setup. You could go long Sol Perp on Drift, short Sol Perp on Jupiter. But Project Zero sees that you're actually delta neutral. So now if the market moves up or moves down, you're protected. You're not liquidated. This is an example with perps, just two perps. And then it sort of builds from there, right? Like if you have spot perp trades, like a lot of people run sort of like these cash and carry or basis trades. Now you can do that across like Camino and Drift, for example, on Solana. And it sort of goes on and on. You can use your Camino lend position to swap on, your favorite swapping venue, stuff like that, where you don't need to, let me like reduce my notification. Sorry, where you don't need to move capital anymore. You can keep capital where it is. You can keep a unified portfolio, but you can get unified liquidity and unified risk against that.
Wow, awesome. So thanks for a great example. It's always easier to get things in order when explaining things like this. And what I like is mentioning Jupiter, and the previous recording we just had, it was with a cat herder from Jupiter.
Oh, nice. Yeah.
And I don't know whose episode will go live first, but a very interesting occasion we have here. So kind of interconnected interviews, and that's good.
Yeah.
Great.
That's a wonderful example. So now you can lend on Jupiter Lend, for example, and you can use that as collateral to borrow on Project Zero, or like to open a long Sol Perp on Drift Exchange or something like that. So now you don't need to. Now Jupiter, if you love using Jupiter Lend, you don't need to withdraw. You can keep that exposure.
Yeah, absolutely. So sounds great, and let's dig deeper into this. The next question I'd like to ask you is the following. So could you please tell us how are Project Zero, Switchboard, and marginfi are related?
Yeah. So marginfi is one of, an increasing amount of venues that Project Zero integrates. So right now, Project Zero has integrated marginfi, it's integrated Camino, it's integrated Drift, and it's integrated Save. Camino is in testing right now. It's live. It's passed all its audits. It's in production. It's just we're just doing internal testing on it, and we're going to roll that out officially on October 8th, and we're going to likely open that up to power users before that date. And Drift and Save are also in audit. They've passed like internal review, so the minute they come out of audit, we'll be able to start rolling them live as well. We're really excited about Jupiter Lend. I'm already talking with like the Jupiter team. I'd love to integrate Jupiter Lend. I'd love to integrate Loop Scale. And actually, the minute we do that, we integrate like Jupiter Lend and Loop Scale. Basically, if you want any sort of like lending coverage on Solana, and again, you have needs across specific lending venues, you can come to Project Zero and access all of that. And again, we're live now with our first market, so this will just sort of be like a progressive rollout. So that's the relationship between Project Zero and venues like marginfi, or any venue essentially that we're going to be integrating. And I just named off lending examples. Like after lending markets, we're going to move to spot and perp markets across like Drift and Hyperliquid Liquid and Jupiter, etc. The connection with Switchboard is that we've sort of set up this radically new pricing system on Project Zero because when you think about DeFi risk, there's two big segments that are important to note. One is pricing risk, and then secondary is a bunch of like financial and quantitative risk. And then there's also like smart contract risk. There's like sort of like three things that, I think it's like a good idea to like think about when you're looking at interacting with DeFi programs. So on the pricing risk side, Switchboard is an Oracle. And we've kind of like pioneered this new Oracle system with Project Zero where we have redundancy across multiple independent feeds. And what I mean by that is like if we're looking to price Solana, for example, and by that pricing, that's how much credit you can get against when you're like borrowing against Solana on any venue, for example. If we're looking to price Solana, we can have a feed from we can use Switchboard to have a feed from like Binance, see what the price of Solana versus USD is on Binance, on like Coinbase, on Pyth, which is another Oracle provider, on Switchboard Surge, which is like a Switchboard specific, like really low latency price provider. And we can have redundancy across all of these. And we can also have smart weighting across these feeds. So if we think like Binance is like a better indicator and faster mover of price than like Coinbase, for example, we can give Binance a higher weighting. And then we can take sort of the average of this every time a user looks to take an action against an asset. And that way, we have this like really robust pricing system where, for example, if price spikes on Coinbase, that's weighted into an average across like Binance and Jupiter and Pyth, etc. And if we think that variance is too high, we'll fail the feed to like protect solvency, essentially. So this like eliminates any sort of like false liquidations on what people call like scam wicks, which usually happen on a single venue. So we have like multiple venue redundancy, and then we have a bunch of like risk checks on the way the price moves to further protect users. And then like since I mentioned like pricing risk, like quantitative risk, and then smart contract risk, I'll just touch briefly on like quantitative risk and smart contract risk. Quantitative risk is sort of like how much credit can we offer against a particular asset. Maybe you come to Project Zero and you lend JupSol on Jupiter Lend, and then you want to borrow against that to open up a position on Drift, for example. We need to make sure that we're offering you safe credit, where if JupSol as a collateral asset moves very quickly in like potentially the downward direction, and you've taken a big loan against it, we can safely liquidate you. We can protect solvency. We can protect lenders. And so there's a lot of like quantitative analysis that goes into that. So that's like sort of distinct from pricing risk, which is sort of like an engineering problem, and smart contract risk. And then there's smart contract risk. And so smart contract risk, we've been very intentional about this with Project Zero. So our credit and pricing system has been audited, I think like close to 5+ times at this point. And it's been through extreme stress tests in production across multiple market conditions, handling billions of dollars of volume. So we've sort of like checked a lot of boxes with that, and we still do continual audits on our credit system from like the program perspective and program, the program itself, the risk system. We do that essentially with every major update. So that's how we sort of covered these three bases. And then the one really important thing, the final thing we wanted to really hit on is when we integrate a new venue, we don't want to add new SES smart contract risk, because then it's like a harder sell. Like if I don't want to use, a bunch of venues to Project Zero, if every time I do that, it adds more smart contract risk. And we have done that by setting up, by essentially what we do is if you want to deposit into like Save through Project Zero, and sort of unify that with your collateral on Drift and Camino and Project Zero Market, etc., to be able to borrow against your whole portfolio. All we do is add a self-custodial account in between you and the underlying venue so that we can liquidate you if we need to liquidate you and protect solvency. If you've taken a loan too big and your account becomes unhealthy and we need to liquidate you. And so this is a self-custodial wallet. So like we have or self-custodial account. We have no control over that account. And because of that, it's added, we're not adding excess smart contract risk as we add new venues essentially. So that's sort of how we've thought, like top to bottom, on making this system as robust as possible.
Wow, extremely detailed, and everything seems to be in order. And still addressing to our audience, if you guys will still have any questions left after this detailed answer from MacBrennan, please drop it in the comment section, and we'll see. Maybe in the new episode we can cover it. Well, and we're moving on. So the previous question was about, as it turned out, integrations and partnerships. What about the competitors? Can you name any competitors of Project Zero, or prefer collaboration instead of that?
Yeah, that's the cool thing. So there's this like famous quote by Peter Thiel that a bunch of people really latched onto, but it's very true, which goes, competition is for losers. And I kind of believe that, like competition is for losers. So Project Zero, and so the relation to that is that Project Zero is a very unique product. I cannot like genuinely name a competitor live in production that does what we do. And that's a good thing. Like I'm happy about that. In fact, like Project Zero is like very multiplicative to the venues it integrates, which is great. So it's actually like exciting when we get to integrate a new venue to both that venue and ourselves, not like some competitive headbutting exercise. And the reason for that is because previous to Project Zero, if your venue is not integrated in Project Zero, if like a trading opportunity comes up, and you're lending on like a particular venue, for example, or you have capital on a particular venue and you want to go trade that opportunity, you have to take your capital off. And so that venue loses that liquidity. Now you don't have to. If the venue integrates with Project Zero and a trading opportunity comes up, you can just use that as collateral to go trade that opportunity you see. And so you no longer need to withdraw from the venues you're using, as long as they're integrated with Project Zero. So we've had like a lot of teams reach out to us to integrate us across multiple blockchains, and that's a great thing. Like it's exciting from both sides. The other cool thing is that when a team gets integrated with Project Zero, their venue ends up becoming more financially efficient. And what I mean by that is rates tend to then start, like a really interesting flywheel is that rates compress to whatever their risk adjusted rate should be. Because now if, let's say, you're lending on venue A and you're lending on venue B through Project Zero, and let's say venue A USDC rate is at 5%, and venue B USDC rate is at 4%. Previously, it was like really hard to compress these yields in like a capital efficient way, especially for arbitragers and more sophisticated individuals, especially, and it was also like very fragmented from a capital experience, because again, if you wanted to borrow from your capital on venue A, you could only borrow from the money you have on venue A. You can't borrow from the money you have on venue B plus venue C plus venue D, etc. And so it's like extremely capital efficient and hard to do. But with Project Zero, wherever your money is, as long as that venue is integrated with Project Zero, you can borrow against your entire portfolio. So if you have $100 here, $100 here, $100 here, you can borrow $300 in one click. And so any sort of like rate compression or arbitrage across like different venues, whether it comes to like rates or pricing, etc., becomes much more efficient, which is like a good thing as well for underlying venues. So that means if like price dislocate, like let's say rates jump on the lending side for like Solana because someone did a big withdrawal on your venue, it's very easy for capital to then come in and stabilize that rate because you can you can collateralize your assets on any venue that's integrated with Project Zero, and deploy that and deploy that credit into the venue that's dislocated. Same thing with pricing. So there's like flywheels essentially for the team's Project Zero integrates, not sort of like this competitive headbutting exercise.
Wow, awesome. And another big thing, actually, without which not any successful project can be imagined, and actually it might be unique, it might be innovative, but it's nothing without the users. Could you please tell us who is actually your target audience, and what is the typical experience of Project Zero user is looking like?
Yeah. So we're sort of focused on two user archetypes, and I think the product is just very multiplicative to two sort of distinct user archetypes. The first is like just passive, you know, simple yield farmers, people who want high yields. They have to use multiple venues to get this, but every time they use an additional venue, they fragment their liquidity. And then if they want to borrow, they can only borrow against their capital on each specific venue. So this makes yield farming super easy. If you want to use multiple venues, you can. And then if you have a borrowing need, you can borrow against your entire portfolio, inclusive of your capital on multiple venues. And then on the like other side is like really sophisticated market participants, like algorithmic traders, market makers, etc. Because now you can run capital efficient, you know, delta neutral trades, basis trades, multi-venue. You can, you know, hedge multi-venue while you're market making and still get credit against your whole portfolio. Like market making is inherently a multi-venue exercise, right? Like if you don't have, you need to have the best prices while other people have worse prices than you. And so you need to be both like adversarial to other venues as like a market maker and, you know, very accommodating on your own venue. And so like you have to interact with multiple venues if you're market making. And historically, again, if you have, you know, money on venue A, money on venue B, money on venue B, a lot of these venues you can't even borrow against because they're just like order books or AMMs, and there is no like native credit ability on order books and AMMs. Now, like the minute they are integrated with Project Zero, you can. So if you have, $1,000 here, $1,000 here, $1,000 here, yeah, you can borrow against a $3,000 portfolio instead of like the current dynamic on market making, which is if you have $1,000 here, $1,000 here, $1,000 here, you probably can't get any credit because you're on order books and AMMs. So it's like a massive step up for these individuals as well, and it's a much more capital efficient experience. It's also just like much simpler UX because you can plug into like a single system and access the venues you want to access. You don't need to manage like multiple code bases. You don't need to manage multiple SDKs. It's just much more straightforward.
Wow, awesome. And I like how much info you managed to get out of these kind of simple questions. And this detailed answer is something what we're actually looking for on this podcast here. So thanks for sharing. And since the launch has just been happening like yesterday, with your ambitions, with your vision, I believe we can expect so many big things happening in the nearest future. So let's drop some announcements or maybe even teasers. Could you please tell us the most ambitious plans of Project Zero for the first year post-launch?
Yeah. So the timeline in a nutshell, it's actually like really well laid out, and you can see a lot of this on our application and in like, we posted some blogs with our launch. You can sort of see a lot of it there. But what the things to immediately look forward to is that our second venue, which is Camino, which is like the largest lending venue on Solana is going live October 8th, and we're looking to give you early, like power users early access to that. So the minute that happens, again, it really levels up because now you can have $100 on the Project Zero market, $100 on the Camino market, and you can borrow against $200 in one click in a very capital efficient way. So like this is when like the unlocks really start to happen. The Project Zero market is live now, so anyone can both lend and borrow on that market. Then after Camino, the Drift's lending markets and Save main market is expected to go live early November. So sort of like a month later, and we'll try to do the same thing. We'll try to give like power users early access to that. And then we have two products going live around this time. One is called Pay, and another is called Strategies. These are like some really cool products. This is sort of like not what you're probably expecting when you hear the word Pay. But yeah, that's just like that's on the docket. So that'll be again like November-ish. And then we're looking to get to like tokenization before what we consider probably our most important integrations, which is perp markets. Because the minute we add perp markets, you had to have this like portfolio margin dynamic, and you can really start to do like under collateralized lending and more sophisticated spot and derivative trading. It's massively like 10x is the experience that Project Zero is able to offer. So that's all expected to happen by end of year, and we're aiming to make like sort of like the big announcement at Solana Breakpoint, which is in December in Abu Dhabi. So that's sort of like the next Q4 essentially, which is fast basically here. Yeah.
Wow. Thanks for sharing. And yeah, I was right. So many big things are coming. So guys, mark your calendars. Stay tuned. Follow MacBrennan not to miss these great things coming. And we'll be also tracking your success. And hopefully in a few months, maybe even earlier, we can record another pod and see what's been done and how the things are actually going. And yeah, since we touched the ground about announcements and thinking about the future, so like kind of a philosophical question for imagination exercise. So could you please tell us, in your opinion, what will the relationships between TradFi and DeFi be like in 5 years from now?
Yeah, I mean, the goal is for it to just merge, for it to be the same thing. There's a lot of things DeFi is better at. One of them is composability, and that's why we built Project Zero. It's like pure composability. It's like using any asset on any venue, anywhere as collateral, which you really can't do in TradFi. So, there's things DeFi already does much better, and there's a lot of like areas where DeFi is going to get even better yet. So yeah, I just love to see it merge. That would be best case scenario essentially. And we'll just call it finance. We'll just call it finance stuff. Yeah.
Well, sounds encouraging. And actually, we came up to the final part of our interview that was so fast. However, the timing is like an average we have here, but I like your approach towards these detailed answers, and I was just following, and here we are in the final part. So we had a great conversation. We have at least built a general image of what's going on, and time for you to address directly to our audience with some piece of advice, financial or non-financial. You decide, maybe some call to action. So whatever you find useful for people to hear right now, please go ahead.
Yeah, that's I would just like I would encourage people who so like prime DeFi native prime brokerage is kind of like a new thing, and I'm sure there's a lot of like questions, and you don't really know potentially what it like actually unlocks or what fully unlocks, or maybe don't think it's great or whatever. I would just encourage people to to try Project Zero because like it's something kind of net new for the space. To give me your feedback. I'm very interested in your feedback. And and yeah, I'm excited when like new stuff gets introduced to DeFi, and Project Zero is definitely that. So like as of today, we have over $100 billion already in the Project Zero main market. We have like 20 plus, third-party teams integrated with us. And yeah, this is sort of like just the start. So yeah, I'm excited to see just what people think as they sort of like unlock this new DeFi superpower.
Wow, awesome, and a pretty logical call to action. And it's really valuable to see when the founder is open to receiving the feedback. To be honest, I didn't have a chance yet to try Project Zero, but right after this pod, I will go and put my hands on it, see what's going on, and
Nice.
calling everyone to join. So yeah, let's try, test. It will be also our contribution for the development of the entire industry. And yeah, that's it for today. Thank you very much, MacBrennan, for joining in. I do hope to see you in more episodes, and I wish you all the best with your ambitious path that has just begun.
Thank you. Yeah, thanks for having me. Appreciate it.